Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. The most recent interest rate cut by the Federal Reserve Bank had been eagerly awaited by American equity investors. It may have softened the negative effects of a slew of horrendous earning reports by financial institutions, but neither the availability of cheap capital nor positive reports of strong economic growth in the third quarter appear to have been sufficient to offset the new speculative highs of oil and precious metals and the drag of the real estate market. Despite steadily increasing consumer spending, analysts predict that especially the retail sector will suffer in the upcoming holiday season, further depressing earnings outlooks and the expectations that American stocks may end the year on a strong bullish note. Technical analysts now believe that U.S. blue chips are entering into a critical period. I've invited Volume Spike Alert editor Stephen Oakes to make sense of the numbers and provide an outlook of what smart traders can reasonably expect in the last 7 weeks of 2007. Welcome, Stephen.
Laura, thank you for having me on the show again.
Pleasure. So after this volatile October, where do you see American markets headed?
Well, I think that it's funny you use the term volatile because historically it really hasn't been too volatile. You look back over the past decade or so, where you had the Dow climb from 2,000 up to its peak around 12,000. I think that would be considered pretty volatile. But we're kind of rolling over. I think it's going to be the norm where you're going to see fluctuations anywhere between 200 to 500 points. And at this stage in the game, we've kind of rolled over. Everyone knows the market's been kind of playing dead a little bit. And I think it's gonna be basing sideways here for the next week or so, building up consolidation, new momentum, and then by the time we get to the end of the year, we're gonna have a nice rally going.
Now, recently we just saw PetroChina surpass Exxon in the market valuation by a whole multiple here. What do you make of the continuing strength of China's markets, considering their economy depends so strongly on American consumption?
Well, I think that especially in the case of PetroChina, you can easily link that to what's happening right now with Google's stock. I mean, we're in a bubble right now, and with the cause, or I should say, with globalization kind of initiating that boom, you're going to see both American companies like Google's valuation blow up, and then the same thing with PetroChina. Do I think it's sustainable? Absolutely not. I think that somewhere along down the road, you're going to see those valuations come down a little bit to more realistic expectations. And but it's a double-edged sword. I mean, over time, we've seen the American economy increasingly linked to that of China, and it's something that's not going to be stopped in the foreseeable future. But I think everything is going to continue. The bubble is going to continue to expand, and over time, especially after the Beijing 2008 Olympics, I think that's when the celebration, the parties, it may finally end around that time once the games are over, and we start moving in towards the end of the decade. So we'll see where it goes from there.
What do you think? Do you think perhaps this will trigger the next big dip in the American markets?
Well, I think so, especially when I was talking before about the increased link between the two countries, and I think that right now, especially with the trade gap that's going on between America and China, it's going to have to come closer to the center. We've expanded out too far, and what that means is that we're going to have to stop spending as much as we're doing now, and China's going to have to increase their domestic spending. So I think what you have is a case where that's going to have to eventually come back into balance, and that could tip the U.S. economy over into recession. Do I think it's going to happen within the next year or two? Probably not. I think that with all the bad news that's come out, investors have kind of shaken off the bad news. A lot of your baby boomers still have money on the sidelines. They still want to invest it, whether it be in China or the United States. I think there's plenty of opportunity in both economies, and when you get to a point, I think, where the baby boomers they get to an age where maybe their spending starts to decrease a little bit, I think at that point you're going to see the American economy kind of reel back and take some losses, because the baby boomer segment of our economy, they're the largest spending block that we have right now. And when they get to the peak, once they've gotten past that peak spending, you're going to see the economy kind of reel back, because basically of all the spending that happens in the U.S. economy alone, we're looking at 2/3 coming from from consumers, such as baby boomers, and then your other third from business and you know, from other sectors. But yeah, I mean, it's something where I think at the end of the decade we're going to have this big end of the decade celebration, and then finally it's going to just go kaput. And I think that with you look back historically, your recessions typically happen at the end of every decade.
Yeah.
So we're looking at, you know, 2000, 2001, that's when the party just started to finish. Then you're looking at 1990, 1991. The same thing in the early 80s, we had the same thing happen. So you know, nothing is set in stone, nothing's guaranteed, but we could be heading in that direction very soon.
Well, let's talk about 2007. What's your year-end prediction for the Dow and the NASDAQ?
Well, the Dow, like I said, it's consolidating, getting ready for a nice breakout, end of the year rally. I see the Dow heading up to 15,000, for the NASDAQ 3,100.
So how should traders play this volatility that we're seeing lately?
Well, I've actually zeroed in on a few sectors. I like tech a lot, and I like energy. And I think that some of the potential plays here is we can invest in sector energy spiders and technology spiders, take advantage of that, or you can actually.
You might want to explain what spiders are for some of our viewers.
Well, a spider is basically an index fund, and what they do is the spiders will take a specific industry, and within that fund they'll locate some of the top performing stocks that will go into the fund, and investors can either invest in the spider index itself, the energy.
Which is the Standard & Poor's. It's
True,
your Standard
true.
& Poor's receipt, depository receipt. That's what it stands for. It's SPDR, pronounced. They just call it colloquially spider.
Correct.
Okay, so it's from the S&P
So
500.
for the energy spider, you're looking at the ticker symbol XLE, and then for the tech spider, we're looking at XKL. But those are two areas where I think investors will be served pretty well going into the end of the year. And if they didn't want to go specifically with a leading sector spider, you can certainly, the information is available online. You can look up the sector spiders and see what stocks comprise of, or what the fund is comprised of as far as individual stock plays that you can go with. And they're all industry leaders. So it's, as far as quality, I think that, you know, it's very appealing for investors, especially today. So.
Well, I'll ask you, if I may, to write up a report about your recommendation and explain what spiders are for people and define all that for us, would you?
Absolutely. I'll have that available, and feel free to check it out on my site, www.volumespikealert.com. Be happy to have you stop on by.
Great. Thank you so much.
Well, thank you for having me, Laura.
A pleasure. To read Steve's report, we'll also post it on the page of taipanfinancialnews.com, the homepage. Just look under the Investment Strategy section for this and other valuable investment and trading information. To learn more about Volume Spike Alert, as Steve mentioned, go to www.volumespikealert.com. Please join us next week for another opportunity for profits on TFN Smart Trading Action Alert. For Stephen Oakes and Taipan Financial News, I'm Laura Cadden.